But well, it looks like it's 7 o'clock, so let's get this thing on the road. Grateful for all the with us this morning, and got good some good information coming your way. And just before we get started, want to acknowledge our sponsors for this crop market and update, which is as we have Angie Martin here with us this morning, the Texas Corn Producers Board, the Cotton Board, and the Texas Sorghum Producers Board, all sponsors for this update, and we do thank them for their support, and couldn't do it without them. Also want to acknowledge Matt Boucher, who's the agent in Victoria County. He's not able to be with us this morning, but he's also a cohort in this effort along with myself. So just want to acknowledge all that are involved. But without further ado, we'll go ahead and get started with our update, and we're going to turn it over to Dr. John Robinson and let him take it away.
Very good. Well, if I can operate the stuff here, you're hopefully seeing my title slide, and we'll get going. So this is from yesterday. This is a picture of the last 12 months, the last year of actually the May cotton futures contract, but it shows what I want it to, and that is first the kind of remarkable climb from below 50 cents to 95, almost a 40 something, almost a 45-cent climb there from a year ago, April 1st to sometime in March of this year. And then we had about a 15, 16 cent reset. And since then we have bounced back, got some support, and have been climbing somewhat. So what's the reason for all of this happening this way? Let's talk about some of those things in the time that we have. The first reason is the typical fundamental reason, and that is that the ending stocks, the leftovers, the expected leftovers of U.S. cotton, and this is the old crop balance sheet for the world and for the United States, they're both getting tighter. And they're getting tighter as a result of the last supply and demand report that came out in April. World numbers here in April were tighter than they were in March, and world numbers in the United States were tighter than they were. These are bales, millions of bales of ending stocks, and they're getting tighter. This is a picture just of the US numbers. There still remains some question about the size of the 20 crop. They didn't do anything to this number, and we were all expecting that they'd cut about 100,000 bales out of it. I know some analysts who think that this number doesn't need cutting, and I know others who think it needs 100,000 or 200,000 bales cut out of it. It kind of depends on your opinion, and it depends on the average size of bales this year, and it depends on a few other assumptions. But I'm thinking with the May supply and demand report that's coming out, this number may come down a little bit. And if this comes down, the supply gets tighter, and the ending stocks number will get tighter than it is right now. That's if that gets cut. USDA has been adding to the export number. They raised it in the April report, and they may raise it again because we're already well over the pace needed to arrive at this number. I'll talk about that more in a second. So this number could go up, and if consumption goes up, that'll whittle away at the bottom line too. So this ending stocks, which is right now getting pretty tight, could get tighter. We could be at 3.5 million bales, I think, pretty easily, and that would justify some of the climb in prices. That would justify the May and the July futures doing what they're doing, which is marching up there and staying up there. Let's talk a little bit more about some of the moving parts here. So here's my picture of exports. Here's that price climb. Here's the reset, and here's the stabilization back in the lower to mid 80s. Prices have been climbing in part because of large demand, export demand, as evidenced by these blue peaks and valleys. This is a record, historically high. It's not a record, but it's a historically high level of export demand. We have already, with these export sales that you're seeing right here, we've already sold 103% of that 15.75 million that USDA forecasts to be the export total. We've already sold all of that and then some. So what I expect to happen is that there'll probably be a few more sales. There'll probably be a few more cancellations. There'll probably be some rolling over of export sales that don't get shipped. All of that is probably going to happen, but it's just know that this price support fundamentally is happening in the context of evident recovery in demand for cotton. The other reason for this price climb, and here again is the price climb, here's the reset, and here's the bounce back. It's following the movement of speculative buying of futures. Here's what led to the selling. This selling led to the price decline. This buying, this buildup of the green area and the buildup of the blue area are cotton futures that are being bought by speculators, and that contributed a lot to this rise. And then the speculators backed off a little. They backed off a little, and prices came down. And now we're expecting, especially these guys in green, we're expecting them to get back in. We're expecting them to buy new crop December on a weather market kind of bet. And we're expecting this to go back up. And that has the potential, especially when I talk about new crop. This right here is what has the potential in a weather market to raise us back up into the mid 80s or even the upper 80s. It's the influence of these guys in green. So we got to pay attention to them all season long, because I think they're going to continue to be very, very influential. Let's see, from an acres standpoint, crop prices would have predicted that we'd have planted 12.5, and USDA predicted that we're going to plant 12. That's in their March 31. So that's believable. Now, what may contribute to that is that we're in a drought, and the Southwest tends to plant more cotton than prices would suggest when we're in a drought situation, because agronomically it's the best thing to do, and from an insurance standpoint it's the best thing to do, is to just plant more cotton, particularly in this region and in this region, your region. So we'll see what happens when we get the June 31 report. But like I say, the drought is bad, the insurance price is high, so I think I wouldn't be surprised to see 12.5 or 13 million planted when it's all said and done. And I wouldn't be surprised to see the increase in acres from June to May or March. The increase in acres come from here. But we don't know anything about what the abandonment will be. I'm assuming it's going to be pretty high. So you put all these numbers in on a 12.5 million acre planting, and then I figure we'll probably have about a 20 million bale supply and an 18 million bale use. 20 minus 18 is going to leave us maybe 2.5 million bales of ending stocks, which is tight. That's all you need to know, that this outcome right here is really tight. And that's another thing that would support futures in the low to mid 80-cent range, even all the way through the summer. In fact, it's through the summer we might see futures going to 85 or 87 or 88. I kind of expect them to be back into the lower 80s by harvest time. But anyway, it's a forecast for strong prices. It's based on speculative buying, but it's also based on this fundamental tightening. And that's it, Bob. If anybody has any questions, I'll be happy to tackle them. Otherwise, they can contact me via these contact info.
South Texas harvest time, or more toward Plains and North harvest time?
Well, October, to be precise, the month of October. So past your harvest time. Yeah, thank you for that correction. Past your harvest time.
Okay, so South Texas could have a pretty good price at harvest, or
I would
have the ability to look at pricing some stuff in July or August, when
in July or August. And I'll say something else too, that you folks if you catch a couple good rains, and I understand that you've had one, if you get 2 or 3 more and get pretty decent production, but particularly get good fiber qualities, get good fiber strength and fiber length as a result of having enough moisture, I think South Texas would be sitting pretty in terms of having premium cash price offerings, because what this drought is going to do in West Texas is it's going to lead to a lot of short fiber and a lot of low mic and stuff like that. So you guys would be high quality fiber, new early season high quality fiber would be very, very much in demand from a cash standpoint. So your basis ought to be really strong, I would think.
Well, great. Well, again, thank you for being with us this morning, and appreciate all the information you brought our direction. So if there's no other questions or comments, we'll move on to Dr. Mark Welch and let him talk about our grains.
All right. Thank you, Bobby. Good to be with you here this morning. Let's see if we can get set up, and you can let me know if we can see that okay, hear me okay, and,
yes,
and we'll get off and rolling. We'll touch on a few of the notes that Dr. Robinson just shared with us. Some things are developing now. We're getting a little maybe a little outlook of what the weather might look like as we again take the grain crop down in y'all's part of the world down through maturity, but also as, of course, just getting planted and getting rolling across much of the rest of the United States. And Dr. Robinson mentioned that prospective plantings report that came out there at the end of March, and that really set the grain markets just on fire. And when that report came out, we saw corn and soybean markets close, limit up. And if you look at the total plantings of these 6 crops, corn, soybeans, wheat, cotton, sorghum, and rice, we're up this year. 247 million be the total, and that's a nice increase. We've had a really tough planting spring the last 2 crop years, and had a lot of prevented planting and limited planting progress, especially up in the northern plains. But to come in below that 250 million level, we certainly could have seen 251, maybe 252. And so I think the market was particularly surprised by that we didn't crowd that kind of number. And then if you look at the changes by a specific commodity, to see corn plantings particularly basically where they were a year ago was really a surprise given the strength we've seen in the grain market. Now, if you look at Texas, we are the highest that we've been in the last 7 years or so. And we did see some switch between sorghum and corn, significant increase in wheat acres. Of course, with wheat, that doesn't mean it's all going to go to grain, that it'll be harvested. But we did see a nice increase kind of back up to the kind of wheat planted acres we'd normally expect. And then this is a real change in the market over the last several weeks. As farmers in the Midwest, where we primarily see these corn and soybean rotations, are making their planting decisions, we've kind of been in a price ratio between soybeans and corn of around 2.6. And if you run a budget from the University of Illinois, for example, and compare the profitability of planting soybeans versus the profitability of planting corn, anything over about 2.45, 2.46 in that price ratio with normal yields would lean that profitability to favor soybeans. And that's where we've been, you can see, since the first of the year, all through RMA's price discovery process, through the prospective plantings or planting intention survey, again, seeing that favorability. And then what do we see in the prospective plantings report? A 5 million increase in acres of soybeans, and then corn holding about steady. But now that we've reached April, corn prices, even though soybean prices are higher, corn prices have risen more relative to the price of soybeans, such that profitability question has tipped considerably back towards the planting of corn. We're also getting a planting pace of this year's corn crop that's slightly above normal. To see 8% planted in week 13 is not a huge amount above normal, but it's still, of course, very, very early. And so there's a lot of open corn ground to be planted. And so I think these are factors that would if the planting season is open, the weather remains favorable, given the price movement that we've seen, I think it increases the likelihood that once farmers get started planting corn, we're going to keep planting corn. The market signals are there, the conditions are there. And so do I think we'll crowd above that 91.114 million acres? Well, I thought that before the report, and I still think that will be the case. I think we'll come in with planted acres something above 91 million. And I think there are some other factors that seem to support that at this point. This was the April WASDE of the kind of shaded areas there compared to the March WASDE. And the big difference in the corn market was this increase in consumption. We had a 50 million bushel increase in feed. We had 25 million for ethanol, 75 million for exports, increased total use to 150 million bushels. Take that right out of ending stocks. And that puts that stocks to use ratio below 10%, down to about a 33-day supply of corn on hand. The last time we saw a 33-day supply was 2013. So these are very tight fundamental conditions when you're talking about the corn market. And then, of course, looking ahead with what then the price prospects might be for this 2021 crop, I think it's interesting. Oh, get back up here. Interesting to know which way we could go from here. If you look at the crop years on either side of 2013, look at 2012, and if you can find 2014 on that chart, I think it's interesting to see the swing kind of year that we may be in right now here as we go into 2021. In that it was just the year prior that in 2012 we saw all-time record high corn prices. Actually, in 2014, we did make a crop and we saw then prices, that's the season average farm price, drop back down below $4. So this, I think, again, could be that pivotal kind of year as we're planting the 21 crop. And just to kind of put some numbers on that, this black line would be the level of production at which we would keep ending stocks unchanged in the 2021 marketing year if our use estimate remains the same at 14.8 billion bushels. So if we leave that use estimate the same, how much corn do we need to keep ending stocks unchanged at these very tight levels, but unchanged? If we do plant 91 million acres of corn, a yield of 176.6 bushels per acre would produce enough corn to leave ending stocks right where they are. And so the question would be, what is the likelihood that we'll have more or fewer acres? And then what will be the likelihood of a higher or lower yield? And I think that the likelihood in both cases is for something higher. We just talked about the acreage question. I think there's a strong likelihood if it's a good spring, if the weather will cooperate, and given the price direction that we've seen, I think the signals are there that we will increase planted acres. And then what about yield? That 176.6 bushels per acre, that would be virtually equal to a trend line yield projection for 2021. If you just draw a straight line through corn yields going back to 1950 and then project it out one more year, you come up with that 176.7. So right at the number we would need in that previous slide. Now, if you look at those projections, those trend line estimates, look at the dots every year to year to year to year, you'll see that there are more dots above the line than there are dots below the line. And of course, that tells us then that, 176.7 is trend, but yet when we have a bad year, it tends to be worse than the good years tend to be good. And so actual probability of a trend line yield is about 45%. So that at any given year, the odds are you're going to have an above trend line yield by about a 55 to 45% probability. So just looking at the numbers would tell us that there's a likelihood that the yield this year will be something trend or just above, the odds slightly favor that. But even a straight trend line yield projection puts us right at that 176.7. Grain sorghum, we had no changes on the supply side, just as we had with corn. We did increase feed use a little bit, which tightened up ending stocks. And of course, we're looking at grain sorghum. We've only got a 6% stocks to use ratio carryover. 22-day supply, very, very tight conditions when it comes to grain sorghum. And we do have an update on the seasonal weather outlook. And just looking at precipitation, you can see that much of the western United States is still expected to be dry. Virtually all of the continental United States is expected to be warmer in this 3-month period of May, June, and July. But this weather outlook would take us through pretty well completing the grain production process here in South Texas along the coastal bend. And so I zeroed in on Victoria, Texas specifically. And if you interpret this shaded area, what that means is that the likelihood of below normal precipitation is the greatest probability in and of itself. In other words, the average precipitation in Victoria for that 3-month period would be about 12 inches of rain. There is a 34% chance that precipitation in Victoria, Texas will be less than that in this 3-month period. And so that is the greatest of the normal, below normal, or above normal. However, if you combine the near normal and the above, there is still a 2/3 chance of normal to above normal precipitation. So yes, there's some indication that the possibilities of it being drier as we wrap up this grain season. But yet in terms of combined probabilities, that's a 34% chance of something below, and then the 66% chance of still something above. So when you're in those light shaded brown areas, not a disastrous forecast. Of course, we'll see what happens. But at least I think puts those kind of forecasts in some kind of perspective. Now, just to shift a little bit north, that's Victoria, Texas, where we'll be wrapping up the grain sorghum harvest. What about Victoria, Kansas, where we won't be planting that sorghum crop for another 30 days or so? Well, they're in the same shaded area. However, you can see they're a little more closely situated to where the browns get a little bit darker. And their actual precipitation outlook for their 11 inches of rain would be a 38% chance of something below normal. And then you can see the combined probabilities of 33% near normal and 29% above. So again, it just kind of, I think, puts some real numbers on what those shaded areas tell us. This is a great tool. And if you'd like to see a link for that, it'll be in my newsletter, or you can contact me and I can show you where to find these. Those are great charts to play with. What our grain prices have done on a weekly basis, going back through the lows back in last July and early August. Of course, extreme increase that we've seen in prices. One thing of note is the degree to which, of course, grain sorghum has been trading at a premium to corn back since early September. And then now, not only have we closed that gap again, but now corn and sorghum are trading at about the same price. So we've lost some of that benefit in the basis for sorghum. And then I think a particular note to continue to see that wheat is the cheapest feed grain in Texas. Now you can't just switch a cattle ration completely over to wheat just because wheat's cheaper. There are some cattle feeding issues associated with doing that. But can you increase the feeding of wheat? The economics would seem to suggest that. Of course, depending on local supplies, it takes different processing and switching up your rations. But to a significant degree, that wheat is the cheapest feed grain we've got going. That's what the price chart looked at the close yesterday on the CME for the December corn futures contract. You can see this strong upward trend in prices is well in place of that December contract with 529 1/4. We were a little bit higher even in the overnight trade. So I think this is creating some tremendous pricing opportunities for this 21 crops. Could we see all-time record high prices this year? Absolutely. As we were just looking at, stocks are tight enough. We can see that kind of switch year to year. But yet, are there some tools and are there some strategies that would allow us to secure these prices, put a price floor under these, not let these get away? You bet. And I think in these strong uptrending markets is the time to start looking at employing some of those as a price risk management strategy. I think another important piece of information to put on your radar, that December 22 contract is trading at 481. As whatever we do next on the selling this 21 crop, take a hard look at what that 22 crop is trading at. If the worst sale on the books for 2022 was 481 a bushel, and that's on the board, and then put your basis on top of that, which is favorable for many Texas producers, which is positive. For that to be the worst price you got, for whatever corn you priced at that level for 2022, I think is something to taking a good hard look at. So good to be with you today. Any questions or comments, or we can clear something up or address some of those strategies that we're talking about, please let us know. My cell phone right now would be the best way to get a hold of me, but in the office much more often, or shoot me an email, and certainly glad to talk about what's going on in these markets. Thank you, Bobby. Great to be with you again here today.
Thank you, Dr. Welch. Wealth of good information, and we greatly appreciate you getting up and being with us this morning and giving us your side of the story there. So greatly appreciate it. Next up, we have Angie Martin, who is the Industry Affairs Director for the Texas Corn Producers Board, and she has gotten up early with us this morning, and we greatly appreciate it. And so, no further ado, I'll turn it over to Angie and let her give you some update what's going on with the Corn Producers Board.
Well, thank you, Bobby, and good report from Dr. Robinson and Dr. Welch. Good to see that we are in a good price point. So just a quick update on the checkoff board. I know a couple of my coworkers have visited with you before, but I just wanted to highlight a few things. Of course, the checkoff board is funded by checkoff dollars that we take and reinvest in a variety of programs. I wanted to give you a few of our research projects that have been funded that would be of particular interest to your area. There are some variety trials happening at the Corpus Station. We have a fall armyworm and corn rootworm study with seed treatments. We have an aflatoxin mitigation product that we're working on. You know, aflatoxin mitigation can be used as a risk management tool, and we have a product called For Sure that's in its final stages at EPA for approval. So that's kind of an exciting thing to be coming down the pipeline. And then we also, excuse me, we also have some breeding research based on Gulf Coast region conditions that I think could be very helpful for growers in the Gulf Coast area. Of course, we also have promotion and education we do with checkoff dollars. I know our education has been highlighted before with y'all. Just wanted to mention, you know, on promotion, that's a lot of that's our partnerships with U.S. Grains Council, the U.S. Meat Export Federation, the USA Egg and Poultry Export Group, working with those groups to continue to expand our markets, keep our exports up, and keep those prices strong, because we know markets is how we get that done. We have several things that we are working on as the state has opened up to work on promotional and education events as well. So that's the checkoff board. Of course, the other hat that we wear in our office is our association hat. And our association is funded by membership and donation. So you can go to our website, texascorn.org, and you can join online, super easy, or you can call our office and we'll help you with it. But we need your help because our association is our advocacy and our legislative arm. And I want to bring to your attention a few of the issues that we are watching right now and things that are happening. Of course, WIP Plus has a bill has been introduced for that. The difference is WIP Plus would cover crop losses in 20 and 21 crops. Previously, WIP had only covered 17, 18, and 19. So this is a great opportunity. Also, a couple of things that have been in the news, you might have seen some stuff on estate tax and step up in bases. Those are both critical to the ag world because of the amount of assets that you carry with your farming operation. And so we are monitoring both of those. Another bill that has came out, the president rolled out his infrastructure plan. Infrastructure is a large item of a variety of different things. Of course, in your area, the ports are important, the locks and dams, as well as we all learned broadband is an incredibly important thing for our rural areas, not just having it, but the amount of broadband available. A couple of things that is in the trade world that we're watching is, of course, we are constantly pushing for trade and expansion of trade, but we're also really monitoring barriers and things that can be put into place. One thing particular interest to our South Texas friends is Mexico coming out and saying that they're looking at putting a tariff on any imported GMO corn. Of course, this would be terrible for our South Texas corn growers because we have so much that's exported straight across the border. So we are working on that. We're looking into both at the national level and our state level on how we can help keep that from happening. Of course, Farm Bill, is an ongoing thing that we are constantly working on. What can we have that's better? What do we need to keep? What do we need to edit? What do we need to revise? And then the main thing that we have really been watching, and you've probably seen a lot in the news lately, is climate legislation. And that's where I wanted to spend a few moments this morning talking about what does that mean? So when you talk about climate, there are multiple different categories. Climate is a huge animal. So there's carbon sequestration, carbon markets. You've probably heard about that. That's one category. Soil health. You've probably heard a lot about soil health and the amount of information that goes along with that. And then we have greenhouse gases. So those are kind of three of our bigger categories as we try to dissect and look at climate legislation. When we talk about carbon, like I said, it's how much can we capture. Then it also talks about, credits. So for whatever's captured, what can be sold on a carbon market. And there's a lot of discussion about who should be in charge of that market. What should that market look like? Should it be monitored, and should it be private? Should it be government? Combination or whatever. But those are both lots of discussion. There was a bill introduced through the Senate yesterday that talked about the establishment of the carbon market and getting certificates saying that you're USDA approved. And so there's still a lot of questions on that. Along that carbon market, there's also one thing that the corn farmers we look at is ethanol. So we look at low carbon from using high octane fuel. And we have a lot of work that we're looking into, is this a way that, corn farmers maybe can get into this carbon market? Because we have, research that we're doing and studies that we're looking at that is not looking like carbon is going to be that beneficial to people, our corn farmers in Texas. One thing that is when we look at the soil health category. In parts of our state, we can't do cover crops. So that's, we just don't have the water, we don't have the rainfall. So that it doesn't always work. But in some places it does work. And so that's one part of the soil health component. One thing that we do in Texas is we have a lot of tillage practices. We have a lot of farmers that are more minimum tillage or even no tillage, and that is a practice that's looked at as a climate smart practice. Also, crop rotation. You know, most of our farmers grow multiple crops, which is seen here today through the market reports. And so that is another component of the soil health category. Also, we look at our conservation programs, CSP, Equipped, CRP. All of those programs through NRCS are great tools on soil health. And so that is a large category within the climate discussion. And then, of course, we have the greenhouse gases. And we have, of course, methane reduction is something that's usually talked about. You know, we've seen our cattle friends try to work on this as they've worked on air quality research in the past and continue to do so. These are just a few of the highlights of the different categories. As I said, climate legislation is a very broad umbrella with a lot of different things underneath it. And the main things that we want our farmers to know and what we are pushing and watching is to make sure that any of these climate programs or any legislation is a voluntary act from our farmers. We we don't want it tied to anything. We don't want it tied to Title I, tied to crop insurance, anything like that. It's got to be a voluntary situation because, number two, we know one size doesn't fit all. So what works in one part of the state does not work in another part of the state in Texas, as well as what works in the Midwest does not work in our state. So we want to be sure that, we're being equitable to all farmers and giving all farmers an opportunity when it comes to climate smart practices. And, one thing that we have really pushed on and I believe is being heard is you've got to increase your investment in the NRCS programs. We all know that a lot of those programs have a lot more applicants than they have funds. So we've got to, if we're going to push for climate smart practices, we have to be willing to invest in it. So that's a major part. And then we want to make sure that our early adopters are not penalized. So everything that our farmers have already been done and been doing, we want to make sure that they're not cut out of it, because our farmers are great stewards and we know that. And so we don't want to penalize them or not reward them for things that have already been done. And then one of our concerns, and one thing that's being addressed through some of these bills that are being talked about, is who's going to be the compliance agent of climate smart practices, and how long is that going to last? Like when you do something, does it stay with the land? Does it go with you? How does that work? And so those are things we're really monitoring as these climate legislation bills are being introduced and climate's being talked about. If you don't believe in climate change, that's fine, but it's here. And these are things that are being discussed. And so it's important that we're at the table to be a part of the discussion and make sure that production agriculture is represented and that our state is represented. And so as we are seeing more and more companies come down with programs, and I'll just list a few of the companies that already have programs in place: Bayer, Cargill, Indigo Ag, Land O'Lakes, Nutrien, Fairfield, Elanco, and Syngenta. And that's just a handful. So if you get contacted or as you're looking at different programs that people are calling you on or talking to you about, a few things I want to really stress with you is be sure and read the agreement. Totally. Read it really well. And then make sure what it's going to cost you. If you're a part of this program with any of these companies, what is going to be your cost? And then what is the timeline of the agreement? There's several of these programs that are 5 and 10 years. So be careful on that. And then as they're monitoring your data, somebody's going to be looking at that data and somebody's going to have that data. So who has that data, and do you have access to it, or can you get a printout? Can you get it as if you wanted to change companies or whatever? And then on what do you get for signing an agreement? Do you get money for carbon being sequestered? And if so, how much? Does your climate agreement stay with the farm if it's a leased farm, or say you have it on your own farmland? If you sell that farmland, does it go with that farm? Is this something that would increase the price of that land? We want to make sure that we're monitoring if the agreement is monitoring carbon and nitrogen, or is it just looking at carbon? Nitrogen efficiency could be a major opportunity for our state. And then when the climate smart practice is done, and maybe you had carbon that you sold, does that price change? If the carbon market becomes a major market in the marketplace, is your price flexible, or is it set early on? So those are just a few things that we really want to stress to you as more and more climate legislation is being introduced and discussed. Just be careful, don't get yourself in anything you can't get out of, and be sure that you read everything really well. And just a point that a lot of these companies have some pilot programs they're doing that they've already started, and very few of those are in Texas. So they might talk it on a national level, but it might not be available in your area. So just be sure that you're aware of that as well. So with that, I'll stop. Again, our website is texascorn.org, and we have really great information. You can always call our office, and we just appreciate Bobby and all he's doing to keep his producers informed and educated on what's going on. And like I said, we're here to help, and we work for you, and we want to be able to answer your questions.
Thank you, Angie. I'm trying to share my screen. Can y'all see the carbon farming plug I'm putting in? Did it show up
Oh,
now?
It's starting. Yeah.
yes,
Now is it?
yes.
Good. Well, since you was talking about that, I'm going to do a little plug for the new ACES and San Patricio County program that we're hosting on May 11th, carbon farming in Texas. So just wanted to give a quick plug for that. But again, Angie, greatly appreciate you getting up with us this morning, and thank you for the information. And there's a lot of things coming down the pipe on this carbon farming. So I'm glad you brought that up and brought it to our attention. So I think we're all going to be keeping an eye on that for some time to come. So greatly appreciate the information and you being with us this morning. And again, I want to thank our sponsors, the Cotton Board, the Texas Corn Producers Board, and the Texas Sorghum Producers Board. And with that, if there's not any questions or comments, well, I guess we are at the end of our update.
Thank you, Bobby. Everybody take care.
Thank you.
Thank y'all, and see y'all next month.
You bet.
All right.
Have a good day.
You too.